Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, Wescoal will conclude deals this year that may treble coal reserves. High grades at Big Daddy project could cut processing requirements. And Transnet eyes an 81 million tonne coal line despite a poor 2010 performance. JSE-listed coal miner and trader Wescoal will conclude deals this year that will increase the company's coal reserves by between 3 million and 13 million tonnes.
We will conclude deals this year on reserves. Okay, this year. Those reserves can be anywhere from 3 to 13 million tonnes. We have some very nice prospects on the table, but we will only mine them, we may only mine them in 18 months' time.
There's two strategies. We want to expand in our trading division. So we're looking at the smaller traders. Maybe we can acquire a smaller trader. That's on the one side. On the mining side, as I said earlier, we need to build a base for sustainability going forward. And that's our strategy. We're looking at reserves, greenfield projects. We're looking at current operators who are currently mining. So we need to get somebody on board that we can get the sustainability going forward.
KWG Resources President Frank Smink comments on the company's plans to merge with junior miner Spider Resources.
I think it's fair to say we've been talking about that for 11 years, and again more urgently in the last many weeks. So we were at the point of that decision when the Cliffs offers came. Under the option agreement with Free West, which of course is now 100% owned by Cliffs, when the option expires and the two optionees have earned their 30% interest, a joint venture is created, and the owners of a majority of that joint venture determine who the operator is and what the program will be. So if you combine the two 30s, that's the majority. Or if you combine a 30 plus a 40, that's the majority. So that's why Cliffs is saying, you know, we only need to buy one of you to do what we want. So the Big Daddy looks to be, as I said before, a deposit that can produce a marketable product readily, and that is something that would be in the interest of Spider KWG shareholders. But not necessarily in the best interests of Cliff shareholders. They own the Black Thor and the Black Label and 40% of Big Daddy. So it's a different, you know, they know the North American market very well. We would have aspirations of making an impact in the export market.
State-owned transport utility Transnet has finally accepted the bulk of the blame for the ongoing underperformance of the export coal line from Mpumalanga province to the port of Richards Bay in KwaZulu-Natal, which recorded its fifth straight year of volume decreases in 2009-10.
Export coal, we will turn around a very poor performance over the past 5 years and drive this industry to 81 million tonnes. Right now, I ought to clarify something. The Richards Bay coal terminal, which is essentially owned by the major mining groups, has capacity for the export of 91 million tonnes. But the coal mines do not have coal right now to export 91 million tonnes. And so the limiting factor is not the rail, it's that the deposits haven't been accessed to enable that to happen. However, Transnet has been a hindrance because there is capacity to deliver in the high 60 million tonnes, around 68, 69 million tonnes in the current system. And therefore we're determined to get there as soon as possible. What we are doing with the industry at the moment is planning the move to 81 million tonnes, which will need them to make certain investments, and for them to sign up take-or-pay contracts at the agreed tariff that enables the significant investment to take place for this growth. And that investment in our 5-year plan is estimated at 15 billion rand. So clearly it's important that the mines are confident enough in their markets that they're prepared to sign up for that expansion.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.